Sinclair. Good evening, everyone. Thank you so much for joining us on this amazing Wednesday. I hope you're as excited as I am. It's going to be an informative session. We have the best of the best, and we're looking forward to engaging with you. To kick start the event, I will hand over to Dr. Futhi Toba, who will just introduce our topic and welcome our esteemed guest. Thank you.
Good evening to everybody on the line, and welcome to this session, which will be extremely exciting and informative. Just by the end of the evening, we will all be informed about the payment system. So just like me, I hope you are all looking forward to it. This is presented by YLC Deputy Governor. A special welcome to you and our speaker, Lisiko Chauke, welcome. Just by way of background, this is a forum which is the IWFSA South Africa, which is a forum, a member body of part of an international forum which have 7,000 members in across 33 countries. And within South Africa, we have 100 members of highly distinguished women who have excelled in their different fields, cutting across from the private sector, business, politics, and whatever. If you've gone to your highest level in your field, you are our member. Its membership is by invitation, so we're quite selective. Our main aim is to develop the younger leaders. So therefore, we have programs like the YLC, which is the host of today's show, and the members that you will be talking to. The YLC are our young and upcoming members. And then we also have a fellows program, which is represented by members that are maybe, let me say, from ages of 35 and above, who are also cutting their teeth in the business, government, civil society sector, and they will look to them to become members of this organization. From the YLC, which stands for Young Leaders Connect, we run programs that are informative, like today's session. We also have a mentorship program. We have an entrepreneurship program, and mentorship also includes boards. So that is what the YLC stands for. However, tonight we are here, Deputy Governor, to listen to you, giving us the background of what the payment system in South Africa is. And I can imagine this is an extremely important conversation. And for me in particular, being in the financial services, I'll be opening my ears to understand whether I know exactly what is going on or I understand it clearly. So we have our esteemed facilitator, Omatate, who will introduce our guest speakers, and I don't want to take more of your time because we have this highly esteemed guest. Over to you, Matate.
Thank you, Futhi, and thank you for always supporting the initiatives of the Young Leaders Connect. We really appreciate it. So just some housekeeping issues before we kickstart. Please note that the session is recorded, and ensure that you keep your cameras and mics off. You may post your questions and comments in the Q&A session. We look forward to engaging with you. We'd like it to be an interactive session, so please make sure that you do post in the Q&A box. So to just introduce our guests that are joining us, we have, as I've mentioned, the best in the game in terms of digital network payment networks. Today we have the Deputy Governor of the South African Reserve Bank, Mr. Kuben Naidoo. Mr. Kuben is a member of the Monetary Policy Committee, so the people taking up the interest rate every month. He oversees the Financial Stability and Currency Cluster, which incorporates the SARB's Economic Statistics Department, the National Payment System Department, the FinTech Unit, the Financial Stability Department, and the Risk Management and Compliance Department. He will also oversee the newly established Corporation for Deposit Insurance. Before the rotation of the Deputy Governor on 1st April 2022, Kuben oversaw the Prudential Cluster and was the first CEO of the Prudential Authority upon its inception. Prior to his appointment as Deputy Governor, he served as advisor to the Governor of the SARB and also as the Registrar of Banks. Kuben is also an activist and a public servant committed to achieving socially just society. Thank you so much, Mr. Kuben. We are so honored to have you today.
Thank you very much, Dr. Mtoba, and thank you very much, Ms. Sawelo, for those very kind words. Let me start off by saying that I'm very new to this area on the payment system. For 7 years, I was CEO of the Prudential Authority regulating the banks, and for exactly 1 month and 3 days, I've been looking after the national payment system. So I'm new, I'm learning a lot, and I'm quite excited because this is quite a young and dynamic area, quite a growing area. I'm going to do 3 things in my talk for about 10 to 12 minutes. I'm going to talk about what the payment system is, and then I will talk a little bit about the Reserve Bank's role in the payment space, and then about what some of the policy reforms that we're trying to make to the payment system. And I'll touch tangentially on some of the issues around cyber and cyber risk and cybersecurity. So with your permission, Ms. Sawelo, let me proceed. The world is rapidly evolving towards a more modernized digital world in which services are immediately available and easily accessed with the click of a button. The success of the digital world is determined by its interconnectedness and, more importantly, integration with digital payments. Young people are at the leading edge of this. Young people are much more tech savvy. I mean, I remember when I was a kid and sort of my mom and dad asked me to install the VCR. You know, I said, when I'm older, I'm sure I'll be able to do this. I'm never ever going to have to ask my kids to do this. But at the very young age of 50, I often now have to ask my 13-year-old for advice on how to fix something on my phone. Young people live in a much more tech-savvy world, irrespective of education, even some ways irrespective of class. They're more tech-savvy than us older people, and they are able to use their mobile devices in ways that we can't and we never dreamed of. Payments are absolutely central to the economy. They're central to people's well-being. And while people want access to a bank account, what they almost more importantly want is the ability to transact. And you know, people have been transacting using cash, physical notes and coins for thousands of years, in fact. Up until the 1st of January 2021, you could use a check to pay somebody. We did away with checks about 13, 14 months ago. You can use a card. So let me run through the evolution of this. You could use a card where your card is physically available. You put it into a machine or you put it into an ATM. But increasingly, you have what's called card not present payments. Right? So if I log onto the internet and I'm paying for something, the card is not present. It's in my hand. It's not present at the point of sale. Similarly, you've got digital wallets today. So I don't need a card. I can move money from one cell phone to another. And you have now debit orders as well. In the payment system, there are essentially two channels. One is called a card channel, and the one is called an EFT channel, right? And the card uses a card which has the card number. It used to be a magnetic strip with some information. It's got a pin, a chip and a pin, and it's got a CCV number at the back, and that's a card transaction. Or an EFT transaction requires your bank account number, right? The former doesn't require your bank account number. And those are essentially the two channels through which we can transact. Countries have a choice about whether digital wallets on my phone have access to which use the EFT channel or use a card channel. So, for example, in China, which is probably the most advanced country in the world when it comes to digital payments, you need a bank account. But in Kenya, which is another country that is extremely advanced in digital payments, you don't need a bank account. You can do it simply from an e-wallet to e-wallet. Whereas in China, digital payments on the phone have actually driven bank account numbers and not the other way around, right? Whereas in Kenya, you can transact even without a bank account. We've also increasingly been able to use biometrics. So at the moment, you can use chip and PIN, or you can even use on Apple Pay, you can use your eye retina or your facial recognition to pay. Those of you with some of the newer banks, you can know that you can use your ring, you can use your spectacles. Essentially, they've got a chip, right? And that's the channel. It's a card-based channel. We've also seen things like cash at till. So now you can withdraw cash at the points of sale. And there's also things like checkers, money transfer, significant money remittance transfer agencies that are using technology to be able to transact. So it's the world is moving extremely rapidly, and young people are often at the cutting edge of that. It is estimated that before COVID, only 30% of small businesses had the ability to transact using digital means, right? Today, about 60%. So we took 30 years to get from 0 to 30%, and we took 2 years to get from 30 to 60% of small businesses are able to transact digitally. That's a phenomenal achievement, and in some sense, it was evidence of the way in which South Africans were able to adapt and the financial system was able to evolve using digital payments. The digital payments network, or what we call the national payment system, is a little bit is a little bit of what I would call an onion ring, right? I mean, at the heart of it is something called SAMOS, and I'll come to that in a minute, which we at the Reserve Bank run. But the entire system is called the National Payment System, and there are various things in there. There are tools, there are systems, there are mechanisms, there are institutions, there are agreements between banks on procedures, there are rules. PASA, the Payments Association of South Africa, manages these rules, these relationships. They play a role. And as the Reserve Bank, the National Payment System Department is responsible for regulating this. Let me walk people through a typical transaction, right? And forgive me for introducing a little bit of technical detail, but why I'm doing it will become clear in a minute. A merchant is, so let's assume that I go to Nando's and I'm buying a chicken for 100 Rand, right? I'm the card holder. I have a bank account. Nando's is the merchant. When I present my card, the merchant requests authorization from the merchant's bank. So Nando's asks their own bank. The merchant's bank submits a request to what's called a processor or a card scheme. So Visa or MasterCard or BankServe or SWIFT or something like that. The card scheme sends an authorization request to the issuer, the cardholder's bank, to my bank, right? It says, I bank with Bank ABC. Can we transfer 100 Rand from Bank ABC to Bank DEF, which is Nando's bank in this case? The issuer either approves or declines the transaction after checking whether the cardholder has sufficient funds. The issuer then debits the cardholder, so they take 100 Rand away from me. And the payment, the card processor or the card scheme forwards a message, an authorization message to the merchant's bank. The merchant's bank sends a response to the merchant, and the merchant completes the transaction and gives me my chicken. And this takes about, we have the ability to process about 45 to 50,000 transactions a second in South Africa. So this takes place extremely quickly. And the merchant bank credits the merchant's account in its books, and the cardholder bank settles the transaction with the merchant's bank, sometimes at night. So let's assume Bank ABC has to pay Bank DEF the 100 Rand. Sometimes that's settled at night, while the money is deducted immediately from the bank. Now, the National Payment System Department is responsible for the regulation, oversight, and supervision of the national payment system. We have multiple objectives in managing the payment system. The first thing has to be security and integrity. We don't want people to get defrauded, scammed. We don't want people to lose money. We saw with the 99 Rand debit orders that a lot of people were losing money through the payment system, right? And we introduced something called authenticated collections. So now if you do a debit order with an insurance company, you have to authenticate the transaction with your phone for that to enter the system. Right? And that's another way in which we've been able to enhance security. Up until very recently, only banks were allowed to do clearing and settlement in the payment system. So clearing is the ability to move money between merchant and customer, and settlement is to move money between the banks. We have increasingly now introduced non-banks, so Yoko, the various non-banks that have applied to become clearing members, clearing participants in the payment system. And we are taking legislation through Parliament that would hopefully open up the banking system, the payment system to non-banks for both settlement and clearing. Right? And our objectives are to ensure that we are able to increase competition, we're able to drive down costs, we're able to foster financial inclusion in this. But at the same time, we must recognize that it is largely the banking system that put in place the infrastructure, the network, the piping between all of these hundreds of thousands of point of sale terminals, the ATMs. And so the banks have an important role to play, but the system is also being opened up to non-banks. Managing that transition is a complex public policy challenge. We want to keep the banks as part of the system. The banks own a significant share of the infrastructure, but at the same time, we want to disrupt the system to bring in non-banks to be able to lower payment costs and foster financial inclusion. But it has to be done in a way that is regulated, the way that is fair, the way that creates a level playing field. And we're in the process of doing that. The Payments Association of South Africa, PASA, is involved in something called the Payments Industry Body. So they're migrating from being only a bank membership organization to being a broader organization that includes non-banks. So it used to be PASA, they're migrating to something that's called the Payments Industry Body. And that's broader than the banking system. There are lots of discussions around cryptocurrencies and central bank digital currencies. Right now, South Africa has got a fairly advanced payment system. If we did not have a very advanced payment system, so let me take two examples of archaic payment systems, the DRC and the United States of America. Both countries have got pretty archaic payment systems. If they want to redesign their payment system, it'll probably make sense for them to use a blockchain, distributed ledger, and to do it for a central bank digital currency. Our payment system is far more advanced in both of those countries. And so we hope to continue to make incremental progress and improvements to our payment system to increase speed, increase efficiency. And we hope to use digital technologies such as blockchain, distributed ledger to be able to do this migration over time. But this is not going to happen quickly. I think you'll see results. We're experimenting, we experiment all the time, but you'll only see results in in 3 to 5 years' time, and whether we can actually move to a fully digital currency. Now, you may ask the question, I've got rands in my bank account. Surely we already have a digital currency. The difference is essentially traceability, right, and convertibility. In a fully fledged central bank digital currency, you've got full traceability between all the transactions. So I know that this piece of 100 Rand note or 100 Rand coin or whatever the case is was owned by X and then Y and then Z, etc., etc. And that's essentially done to try and prevent fraud, try and prevent. A big trade-off in the financial system is financial inclusion on the one hand, but anonymity. People like cash, they like the anonymous use of cash. And as regulators, we try and deal with anonymity, or we try and regulate anonymity because we've got certain obligations in terms of preventing fraud and money laundering and theft and terrorist financing, etc. So you've got to balance those trade-offs. Cyber fraud is a major issue. South Africa has a very advanced partnership between the banks and the payments providers to be able to deal with that. I think the way in which the country has managed to tackle the 99 Rand debit order challenge is an example of cooperation. A lot of people lost money, but we've been able to almost get rid of it. You don't hear of it much anymore. And that's because of cooperation between the public and the private sector. So, Chair, let me stop there, but to make the following points in conclusion. The payment system is a dynamic area. We are trying to open up the payment system in a responsible, mature way. People who enter the payment system have to be honest. They have to have a degree of regulation. There has to be protection for both the customer and the issuer in the payment space. But at the same time, we are keen and we are committed to opening up the payment system to bring down costs of transactions so that we can foster financial inclusion. Young people are at the heart of driving these technological changes. Thank you.
Thank you very much, Deputy Governor. That was very insightful, and I, for one, learned so much. Just looking at some of the comments in the box, Ms. Charmaine is saying, so true, Governor. Young people are exceptionally tech savvy. We just need to raise awareness on how they can stay safe online. Zinke said that her favorite digital payment method is the Apple Pay, especially for those of us who like traveling without our purses, just our phones. And Triforce is saying financial inclusion is key. And Kando is mentioning that NFT system is a new digital or cryptocurrency is a very interesting payment system. So we have quite a few comments, and we'll tackle the questions towards the end. We just want to introduce Ms. Lesego Chauke next and her presentation. So thanks, Deputy Governor. So Ms. Lesego Chauke spent many of her years in her career building her credentials in strategy, design, execution, and operational excellence. She's a seasoned business change and strategy practitioner with a solid track record of delivering solid business transformation results. Ms. Lesego spent 15 years in financial services in various roles, ranging from operations to strategy and portfolio management. Her exposure to payments in South Africa and internationally solidified in 2019 when she joined the card and payments team and one of the financial institutions as the executive head of debit payment systems. She then progressed more into payments as the managing director of Diners Club South Africa until 2019. Since payment is a regulated sector in South Africa through the National Payment System Act, which the governor has touched on, and the regulatory body, there's a regulatory body called Payments Association of South Africa. In 2022, she was appointed the Chief Payments Officer at the Payments Association of South Africa, with her mandate being overseeing the regulatory and operational function of the various payment systems that form part of the national payment system. She is now the executive head of financial services at Net1. Ms. Lesego Chauke, thank you so much for joining us and welcome.
Good evening, everybody, and thank you, Ms. Soweto, for that intro. I think just a point of correction, my tenure at PASA was for the period 2020 into 2021, and subsequently I've then joined Net1, which is where I currently am. Just for that point of correction. Otherwise, it looks like I probably work for PASA and moonlight at Net1, if that be the case, just to clarify that timing element. But thank you for the introduction, and I am very honored to be part of this conversation this evening, and thank you for the invitation that was extended to me. I'd like to spend a bit of time talking about digital payments really within the South African context, so the perspective of South Africa in this regard. Deputy Governor Naidoo spent time talking us through the formalities of the payment system, the legislative, the regulatory oversight, and some of the changes that have been notable over the years that he spoke about. And what I want to talk to you about is, in the eyes of the beholder, digital payments for a South African like me and you, and even the South African who is not on this call with us this evening. Please then proceed to the next slide. So tonight I'm going to touch on a couple of aspects, looking at how digital payments are defined within South Africa, what the transfer value actually is, and it's again, some of the terminology quite technical. I'm going to try and make them easy for all of us. I reflect on the journey I went through to try and understand the terminology and the jargon. So I'm very appreciative that it can be a language on its own. So we'll touch on some of those critical concepts. We'll look at some trends and what has happened in South Africa in the past few years. There's an element that is amongst us, which we call the cash conundrum, and that is the prevalence and the entrenched store of value within South Africa, which is cash. We'll look at some of the macro considerations. Deputy Governor Naidoo touched on some of those in relation to the national payment system and the Act, and then some food for thought on future considerations. Next slide. So when I first got the brief and the invitation, I did what most of us do when we have a question about something. We ask the tried and tested Google. So I Googled it, digital payments in South Africa. And I wasn't surprised at some of the results and somewhat quite eye-opening. So first things first, Google identified some of the common types of digital payment platforms and ways of conducting digital payments. Some of them quite familiar to us on this call: debit and credit cards, internet banking, mobile wallets through mobile apps, your point of sale where you swipe your card, and USSD, which stands quite fancily unstructured supplementary service data. So that's, the hash 120 star construct, short known as USSD. And then I looked at what's in the headlines pertaining to this topic, which is quite broad. And again, the headlines covered quite a spectrum, ranging from legislative, so some African countries considering what they're calling an e-levy for digital payments on various platforms. Looking at the banking ecosystem came up, and moving beyond the traditional channels and embracing and adopting digital payments. There was some information around trends in the e-commerce space within South Africa, and unfortunately, true and so, the criminal elements amongst us who unfortunately are also using these developments to swindle the hard-earned cash from South Africans using digital payments. So again, very broad. Simply by Googling digital payments in South Africa, the array of options came about. I then thought, let me rather look at it from a more formal context and beyond the headlines, beyond general description, what really constitutes digital payments in the South African narrative that we find ourselves. Next slide. So digital payments is really about the transfer of value from one payment account to another using a digital platform. And Deputy Governor Naidoo made mention of this, that South Africa has moved over a journey of many years in adopting the various forms of digital payments, and notably so in the last 2 years as a result of COVID-19, which essentially accelerated our adoption of digital payments, as most of us found ourselves under lockdown and literally used various payment platforms to acquire things as basic as the milk, bread, and butter, right through to acquiring some of the tools we needed in order to still be economically active while being home-based. And so COVID-19 has certainly, as the Deputy Governor mentioned, in the last 2 years, accelerated the adoption of digital payments in order to fulfill transactions that were now part of life and no longer the exception. And then there's that element of why digital payments is so important. And there are 3 main advocated benefits, mainly that it should be cost saving. So it should be cheaper for us to be able to transact online and to use digital forms of transferring value. It's supposed to be transparent as well as secure. And transparency also speaks to being able to access the information we need in order to make the right choices on how we spend our money on the digital platforms. And the third one, which was also touched on before, which is around financial inclusion. And I'm going to touch on these 3 advocated benefits in a bit more detail as I took you through some of the conversation elements that I have prepared for this evening. Next slide. So if we delve a little bit further into what the e-commerce trends look like in South Africa, so beyond Google, and we narrow it, it wasn't surprising to see the prevalence of the credit cards as a form of payment for online shopping within the South African context. It is the most well-known, I guess the most prevalent amongst us, and it came out strongly and unsurprisingly so. Interesting enough, cash came up, but to qualify what cash represents in this context, it is in itself not for digital payments per se, but it's in the fulfillment of the digital transaction. So as an example, when you order something online and you go and you collect it, you would fulfill the transaction using cash, or when a delivery comes to where you are located, fulfilling that transaction with cash. And that's why cash is in this construct along the lines of online shopping. And then there's banking transfer, the most common being electronic fund transfer. So when you do an EFT to process a payment. E-wallets have come through, and mobile wallets. Somebody mentioned earlier in the conversation how they love Apple Pay. So the likes of Samsung Pay and Apple Pay also gained notoriety in the recent past, and others under other, that's where you find the likes of USSD. So these are the trends that have been observed within the South African market and the types of digital payments and platforms that South Africans have used, quite notably so, to fulfill their online transactions. Next slide. And this reinforces what the previous slide showed, which is again the entrenchment of credit cards and debit cards, and that construct I mentioned earlier that we'll touch on in a bit more detail. Cash as a store of value and transfer of value, very, very prevalent within South African society, and the other forms and types that we've mentioned. If you look to the right, though, you'll see again credit cards and debit cards maintaining their position and even increasing in terms of usage, the context that I've already shared. You'll see cash, as much as it's increased, but not as much. And you're seeing the emergence of the other types of digital payment types making a strong presence and gaining usage as part of the way South Africans currently prefer to transfer value and fulfill their payment obligations. Next slide. And so with that as the formal construct, I then want to touch on the understanding of what we mean by transfer of value. And again, a very simple approach in translating it into the everyday conversations that you and I would have and what that then means in relation to digital payments. Next slide. So South Africans in the main, on a daily basis even, transfer value or money in order to fulfill what we call their living needs at 98% of what transfer value actually achieves. And that's food, groceries, paying your bills. So the day-to-day things that we need, you and me, to live and to carry on with life. Receiving an income, so payments of wages, salaries comes in a strong second at 95%. And then 37%, which is remitting money. And remitting money is usually, it's actually moving money from one person to another, so person to person, or from a business to a person and the like. And the term remittance actually just refers to that, the moving of money from one form to another. And this is essentially what transfer of value achieves within the South African context. And I'd like you to just hold on to that concept around the living needs, the prevalence of transfer of value within that construct, because it's a very important consideration for some of the things I'm going to touch on in the next slide or two. Next slide. And I think this slide and the one afterwards also reinforce how the adoption of digital payments, digital transfers have taken a foot in the last 19 years, and more so accelerated in the last 2. So you will see digital incomes having doubled. Digital usage across the various ways we've talked about has more than 4 times increased. And then remittance, which we also touched on, which is the movement of money from person to person or business to person, has also enjoyed quite an increase over this period. But again, notably so in the last 24 to 36 months within South Africa. Next slide. And I think this is where it gets quite interesting, because the stats also show, while we've seen the significant increase in adoption, digital platforms being used to the extent that they have, and this was based on a FinScope survey that was done, we've also seen the staying power of cash. And one of the statistics noted is that up to about 25%, give or take, of South Africans, is between 25 and 30, withdraw all the money as soon as it is deposited into a bank account and transact in cash. So it's very important to take note of that. If we know we can't have conversation around digital payments and platforms and evolution and not take into consideration this very prevalent way of doing business in South Africa, way of living in South Africa, which is cash. Next slide. The next slide. So I'd like to touch on this very, very interesting concept. Well debated, well talked about, very prevalent in a lot of the conversations we have as South Africans and had about South Africa, which is financial inclusion. And you will remember the 3 elements, advocated benefits. The third one was financial inclusion. And I want to then just qualify what some of that means in some of the narrative at a high level of what we mean by this construct. In South Africa, there are mainly 4 basic requirements for financial services. That's the ability to transact, to get credit. So credit, again, to extend your ability to fund your goals and requirements, the ability to save, and the ability to obtain insurance for the unforeseen expenses as life does bring. However, you have the opposite of financial inclusion, which is exclusion. And that's the reality of many South Africans for the reasons noted there, not being able to access those 4 fundamentals, mainly due to limited infrastructure, cost of service, financial services have been historically quite cost heavy, and knowledge and information that has not been accessible to assist a lot of South Africans in making those decisions pertaining to those four constructs of basic financial services. And in order to do that, there's a very important consideration around economic participation, so that individuals and businesses are able to contribute to the economic growth of this country. And that is the essence, essentially, of financial inclusion. And what role can digital payments play in that? Absolutely, unequivocally, the importance of access, enabling every South African as much as possible to participate and to get access to those fundamentals. Inclusion has to happen at a macro level, which Deputy Governor touched on, but also at a micro level where you and I live and breathe and carry on with our business as usual day to day. And ultimately, the reach of critical mass, which sits in the economies of scale. So when we think about financial inclusion, it's very important to think about it in this construct of what it actually entails, what is the historical construct behind it, what it means to achieve it in terms of economic participation, and the role that digital payments can play in that particular construct. Next slide. Can we have the conversation about South Africa without looking at the dual economy? If you look on the left, very well structured, a path well structured and well paved for success, access to tools. You'll see in terms of penetration of technology, the various forms that enable digital presence, digital participation, digital enablement. And literally in some constructs of South Africa, across the road, the reality, the unavoidable realities of an ecosystem that can't even think about digital because it's grappling with the basics and the realities of life. We have this construct in South Africa, and it's very important to take that into absolute consideration when we have these conversations around financial inclusion, and not just financial inclusion, but the digital payments construct, the enablement of digital platforms to achieve what we are saying is financial inclusion. Next slide. And I think, we'll make the slides available to you to go through in detail. But here it touches on the dual economy that says there is a construct of South Africa that is, as it is classified in the terminology being as bold as it is, the poor and the working poor. And then there's the middle class, and then there's the affluent. And when thinking about this construct in the conversations we're having, the dual economy is a very important consideration. When you think the extent to which the working poor and the poor interact in what we call the informal sector of South Africa, the informal sector being the main provision of livelihoods for a lot of South Africans, as opposed to formal sectors, and how that influences and impacts the decisions people would make even on topics around digital platforms. And again, when you're looking at how the South African story unfolds, you can't help but think about when you're talking about people's livelihoods and how much they make or how much they can obtain from a living requirements. To what extent is digital payment something that they think about? To what extent is it a priority? To what extent is it something that they actually can engage in a conversation about? Next slide. For me, this is the one that actually starts unpacking the details when we talk about access. And access says we've got the ability to. 95% of South Africans have a cell phone, as you can see, various types, ranging from the Apple Pay, the Apples, the Samsungs, Huawei's, smartphones, right through to the basic hello, bye-bye phone, which you can get for about 150 Rand in our retailers. 70%, give or take, of South Africans have access to the internet, but we will qualify that. and then also other tools that enable them to access digital platforms. And if you look at the cost of 1 gig of data, South Africa is sitting fourth from the bottom there at 78.50 Rand on average per gig of data, relative to some cheaper options and even some expensive ones. But when you look at that number, you start thinking about what is competing with this average price of data. And I argue what is competing with that is the basic requirements. What we talked about earlier. Do we spend that kind of money on data, or do we spend that kind of money on basic living needs? Transport to get us to work and back, transport to get us to school and back. And therefore, while we're saying we have this penetration of cell phones, we have 60% access to the internet, there's the realities that say to what extent and in what context do we entertain it? And to what extent the South African population is able to immerse in this conversation fully so. If I look at the next slide, it brings us to the cash conundrum that I mentioned. And the cash conundrum speaks to the prevalence of cash in our market. If we look at what it says there, very interesting stats with BankServe Africa. And BankServe Africa is a payment service provider that's part of the national payment system, and they facilitate transactions between financial institutions and the Reserve Bank. And if you look at a very important number there, in December alone of 2021, 93.5 billion rands worth of transactions went through their system. Only 10% of those were digital. The other 90% were cash. This is South Africa. So we're talking about digital, and we're talking about a reality. Why cash? Mailbox banking, which we touch on, people withdrawing their money. The ecosystem.
I believe we've lost Ms. Lesego.
Yes, it seems we have Zinke. I think
In the
they.
meantime, let's just look at the chat and open a Q&A, and then we'll continue with the presentation.
All right. Thanks, Zinke. And thanks to Ms. Lesego in absentia for that amazing and informative presentation. We have quite a few questions in the chat box. Governor, if you can just address, we have a question around, can you please explain the EFT evolution? In other banks, it takes 2 days. In others, it's instant. What's the reason for that? We now have like your OZOs, your pay fast. How's that affecting the time lag?
Sure. Our aim is to try and get instantaneous retail EFT settlements. Some banks do it within the bank. Some banks do it between banks for a certain amount of money. Sometimes you got to pay an extra 50 or 75 Rand for an instant payment. But the objective here is to try and get instantaneous real-time settlements. This year in July, 1 or 2 banks will be piloting what we call a relatively low-value retail payment facility that would be real-time. So the person will get it instantaneously. So the amount is up to 5,000 Rand. So if I go to a shop and if I buy something, they would get it instantaneously, right? It will be in their bank account immediately. Even in a township setting, there, Ms. Chauke works for Net1. Net1 have a product where you pay cash. Let's say you buy a packet of crisps for 10 Rand. The 10 Rand goes into a box, and it's a secure box. That box is regarded as your bank account. you can actually use that as if the money is in your bank account to buy supplies, right? And so there are all sorts of innovations like that. But yes, some banks are faster and some are slower than others. You know, I think our objective is to, over time, get to a point where certainly what I would call low value retail payments, and in this context, we've defined it as under 5,000 Rand, can be instantaneous.
All right. Thanks for that, Deputy Governor. And another question is just around, security. You've mentioned the fact that the SARB is doing quite a lot in terms of enhancing security. Is our information secure with these platforms? Because, the digital payment service providers are getting access to our information, and, there's POPI Act, all these issues that they deal with. Is our information truly safe?
So, Ms. Sawelo, here's the trade-off we have, right? Do you allow as many entities as possible to enter the payment system, or do you keep it very safe and secure? And there's a trade-off. If I say, and the debit order issue was an interesting one, this 99 Rand debit order scam. So there are thousands of companies that go to the banks and they say, we are an insurance company, or we're selling a funeral policy, or we're selling pet insurance, or we're selling a monthly delivery of coal or wood to your house, and the person will pay monthly. They must sign a debit order form. You get access to debit orders. And in theory, any business can do that. But what happens if I get Ms. Sawelo's data from a third party? I buy your data from somebody, or I bribe somebody to get your data, and I put in a debit order for you, right? And so you then start seeing it was 99 Rand, but you start seeing these debit orders, and after 3 months, hey, I didn't sign up for this monthly delivery of wood for 99 Rand a month. You raise the alarm, and then you've got a problem, right? And so how tightly do we regulate these people trying to enter aspects of the payment system? And there's a genuine trade-off here. So one option is to say, no, you must be vetted by the Reserve Bank. We will do a fitness and proper test on the individuals. We will do a source of funds check. You must even put some money in reserve at the Reserve Bank in case you steal people's money. That's one extreme, right? The other extreme is, well, anybody can join the payment system, and if you use, if you use XYZ and they steal your money, well, it's your problem. It's the same equivalent of as you've gone to a tuck shop and they've cheated you, right? And so we've decided that we do want to open up the payment system to non-banks, but there will still be a degree of regulation. We will still have to vet the company. We will still have to do some fitness and proprietary checks. If we allow non-banks to have settlement rights in the payment system, they may have to deposit some money at the Reserve Bank, right, as a security. But we don't want it to be as onerous as having a banking license, because that'll be too onerous. There's about 20 banks that are participants of the payment system. We envisage a situation where maybe another 50 to 100 companies can get access to settlement and clearing, but not 10,000 companies, right? I mean, you would have middle people, and those middle people would have to have a degree of regulation and infrastructure for safety and security, because information theft is a huge problem. Now, there's another regulator. We regulate the banks and the financial sector and the payment system. There's another regulator called the POPI regulator, the Papaya Act. Right? That's another regulator. And it is very true that the data that you provide is not as secure. In South Africa, we get things called screen scraping. People sell data, they buy data. In some cases, the banks don't do it, but many other companies do. They buy data and sell data, your own usage data. And in some cases, they breach privacy laws when they do that. When people sell the data. So yeah, it's a challenge, but there's a genuine trade-off, and we're trying to find the right balance.
Thanks, Deputy Governor. And I think it's quite encouraging to see that, the regulator is creating opportunities for entrepreneurs in the fintech space and trying to lower those barriers to entry, because as you've mentioned, that a banking license is quite cumbersome. I think another question would just be, would like to know, what are your views on digital currencies such as cryptocurrencies? We're seeing the emergence of NFTs and their place within the economy. Maybe you can touch on them from a regulator's perspective, and Ms. Leseho can also touch on them from a payment system provider.
Okay. I might take a little bit of time on cryptocurrencies, but let's assume that you keep your assets, your store of wealth in cattle. Right? So let's assume that you keep it in cattle, you trade in cattle, you pay Labola in cattle, you use it as a store of wealth, you use it to transact. The central bank doesn't get involved. We don't regulate this, we don't legislate this. Similarly, if you buy a piece of artwork for 100 Rand and you sell it to your neighbor for 120 Rand, you've used this asset as a financial asset. You've used it to store wealth. We don't regulate that, we don't get involved. So the original view of cryptocurrencies is this is not a currency, it's an asset. Some people see value in it. You're entitled to buy it. There are rules about taking paintings out of the country. There are rules about taking yachts out of the country. There are rules about taking horses out of the country because they are used as store of wealth. So there should be rules about taking cryptocurrency out of the country for exchange control reasons and for anti-money laundering reasons. And we largely stayed out of it. That view changed about a year or two ago when it became increasingly obvious that cryptocurrencies were serving a particular need in the economy, in society. And we started a process by identifying what and how we regulate it. The Intergovernmental FinTech Working Group published a discussion paper, and we essentially said 5 things. One is that we would seek to declare it a financial asset. So that allows the FIC to track it. It allows the Financial Sector Conduct Authority to declare it a financial asset and to regulate it. The second thing that we said is that there will be KYC rules for the exchanges. So the exchanges, if Ms. Sawelo wants to buy crypto, she has to do a full KYC, and the exchange has to keep your name, ID number, and proof of address, so that if you transact, the regulator can at any point know who's transacting, right? The third thing that we would do is we would say that if you use it to transact abroad, then normal exchange control regulations apply. So you can take up to 1 million Rand out of the country with no questions asked. You can take a higher amount if you've got a tax clearance certificate. If you're a corporate, you can invest up to 5 billion Rand out without exchange controls. But anything more than that, you need exchange control approval. And so you've got to comply with exchange control approval. And lastly, there has to be a health warning that warns customers from an investor protection point of view about the nature of the product that you're investing in, that you can lose your money if you invest in this. And that's where we will stop. So our view is that they should be regulated. The exchanges should be regulated. You should have to transact through an exchange. It should be declared a financial product. There must be KYC and ex-con rules and an appropriate health warning. And then whoever wants to buy the cow can buy the cow.
Thanks, Mr. Naidoo. I mean, that's quite interesting, and we look forward to seeing more regulations around this as more businesses, tap into those digital currencies such as cryptocurrencies. Ms. Leseho, I think you're back online. Do you want to just give us your insight on that?
Hi, everybody. Apologies for that. So, as Murphy's Law would happen, I lost my digital connection. So, I had to step off a bit there. And again, I missed the part around the question. So, I came on when Kuben was giving a response. So, Mr. Well, if you don't mind repeating the question for me.
So the question is just your view on digital currencies such as cryptocurrencies. We're seeing the emergence of NFTs, and what do you think their place is within the economy?
So I think, again, it's one of those topics that, the Deputy Governor started and talked about a bit in terms of where we find ourselves in our levels of maturity as South Africa relative to other markets and what we've seen happening. There's obviously a prevalent concern around the lack of oversight and regulation on cryptocurrency. And we have seen, those that win big, and those that lose have lost badly. And I think there isn't really an absolute response to that right now. I think it's part and parcel of the evolution of digital platforms and how we use and consume them, that the story of digital and cryptocurrency is going to unfold. And I think there's definitely a lot of conversations to be had. It is one element of transfer of value that cannot be ignored. And I think, if I look back in a few years, in terms of what the Reserve Bank has done, there has been some strides taken to try and understand digital currency in the form of crypto, and some initiatives that the Reserve Bank itself has taken in particular to try and really look at how this translates into a form of transacting safely, securely so within South Africa. I think the journey is still quite long ahead of us, as we all really put our heads together to come up with the solutions that will work for South Africa. And I think fundamental to that will be making sure that they are safe, making sure that they are up to standard in terms of what we will interpret as a safe store of value, and therefore can be used for transfer of value. And for me, where I sit as a consumer, I think I don't know enough to safely and confidently, engage in the topic as a consumer. And I think our regulators and those who have oversight over our financials and our currency are similarly also working through the work to reach a determination on behalf of South Africa as a sovereign state. So the journey is still quite ahead of us, quite long, a lot of undeterminants, a lot of permutations, but I am confident that, with the Deputy Governor and some of the work being done by the Reserve Bank, we certainly aren't sitting doing nothing. There has been work being done, and I'm very confident that more will be done to advance us as South Africa and South Africans on this particular topic. It's not going to go away, that's for sure. It's really about how we respond to it in a responsible manner that will be to the benefit of our people, and making sure that in doing so, we maintain the integrity of our payment system, of our currency, and of the sovereignty of South Africa overall. I'll leave it there.
Thanks. Thank you so much, Ms. Lesego. I see we are over time, and this is quite an interesting topic. Digital payment networks is very broad, and we thank you so much, Mr. Naidoo and Ms. Chauke, for just joining us and simplifying the concept of, what digital payment networks means, and also what you guys are doing in your different spaces to enhance it and to ensure that there is that financial inclusion. And we sure thank God for, I think one of the positives from COVID has been that digital acceleration, and seeing how we've made progress over the 2 years that is, equivalent to progress we made over the past 30 years of increasing the digital payments to 60%. So that's really great to see. And thank you so much for sharing your insights with us. We really appreciate it. Thank you.
Thank you very
Thank
much
you.
for the invitation and the great conversation. I really do appreciate it.
Thank you, ditto. Really appreciate it, and good luck in your endeavors.
Thank you so much. Thank you everyone for joining us. We hope that you have enjoyed this conversation as much as I have for one. It has been so insightful.
Thank you. Thank you, Governor.
Yes, I'll hand over to Ms. Futi to just close off for us. Thank you.
Oh, thank you. You've done a good job of closing, and everybody has said farewell. But I think this conversation is to be continued, as the indication was that this is still a lot of work to be done, and quite interesting. And to give Ms. Chauke to finish her presentation, that we wanted to see what was the end story between that cash and the card that she was building. Yeah, thank you very much. We truly, Deputy Governor, appreciate the time to just sit here and provide this information to our young leaders. Have a good evening, everybody, and everyone who was on the line. Great participation. Have a good evening.
Thank you.